Hello, everyone, guys. Good evening. How are you all? Good evening, everyone. Good evening, guys. Good evening, everyone. Am I audible? Am I visible to everyone? Hello, guys. Good evening. Am I audible? Am I visible to everyone? Yes or no? Hi, Kiran. Good evening. Hello, everyone. Audio, video, everything is clear, working fine, no issues. Yes or no, everyone? Just please comment. Hello, good evening, Sarth. Good evening, Karthik. Good evening, Kiran. Good evening. Everything is clear. Everything is working fine. Okay, so I welcome you all in this new batch. This is again the capsule batch for PPB, guys, right? So, in this complete capsule batch, I'm going to complete one module in one day, right? And one thing is the very important thing you have to understand that this capsule batch is a revision batch, okay? This batch is not for detailed discussion. So, when you are studying this batch, and when you are seeing that, okay, ma'am is going in speed, you must understand this that we have to complete one module in one day, right? So I am going to give you only exam oriented content which is relevant for your exam. I am covering maximum 90% of the syllabus will be completed, okay? Unnecessary things I have avoided. Why? Because you don't have to go in depth in this complete capsule batch, because this batch is a revision batch for all of you. So all you have to do is to revise with your educator in this capsule batch, okay? Hi, Shamila ma'am. Good evening. How are you? Good evening. Good evening, everyone. Good evening. So can we start the session, everyone? Can we start the session? Whoever is in the class, just please comment. Hi, Gopal. Good evening. So, you all have cleared your IEIFS exam, and let's just make this PPB work also, right? So, let's talk about the very first unit of the PPB, that is banker customer relationship. We are starting with module A. So, banker customer relationship, first we are talking about the debtor and creditor relationship. So, when we are talking about the debtor and creditor relationship, always remember a bank can be act or bank can act as a debtor, as well as bank can act as a creditor. Both is as well as a customer can act as a debtor, as well as a customer can act as a creditor. Okay, the very common thing what we have learned is when the loan is given to the customer. So when a bank is giving loan to the customer, so bank is acting as a creditor and customer is a debtor, because the loan, the amount is due on the customer. The customer has to repay that amount. Yes. And bank is giving you the loan, so bank is a creditor. So when bank gives you the loan, bank is a creditor and customer is a debtor. But when you deposit your money in the bank account, like I am deposit 1 lakh rupees, I am depositing 1 lakh rupees in my saving account. Now, in this condition, because I am giving money to the bank as a customer, I am depositing 1 lakh rupees in my saving account. It means that that bank is responsible for repaying this money on my demand. Whenever I want, bank has to repay this money. So in this scenario, the money is due on the bank. So bank act as a debtor and customer act as a creditor. So bank is a debtor, customer is a creditor, in which case when the customer deposit money into the bank account, right? And bank is a creditor, customer is a debtor when bank gives loan to the customer. Clear? Simple thing. Now next, bank as a trustee. Now trustee is the one to whom we can trust, okay? So when a customer is depositing their valuables to the bank for their safety, like for example the customer is giving property paper to the bank, right? A customer is giving any shares in the demat form to the bank for the safety and security of that particular thing. Now, in this, bank is acting as a trustee. because the customer is trusting on the bank is responsible for taking care of that goods. Okay, so in this condition, bank is a trustee. Now bailer and bailey concept. See, bailer and bailey concept, bailment. For bailer and bailey, we have to understand what is a bailment. Bailment means the act of delivering of good for some specific purpose. Like, for example, I am delivering a good to Kiran for the security and safety of that good. Okay, so it is the good is delivered from one person to another for some particular reason, that is safety. So this is called as what? This is called as the bailment, right? Now, when a customer is given or giving some valuable items to the bank for the safety, like the customer is depositing securities, customer is depositing security papers to the bank for the safety and security of that particular thing. In this particular scenario, always remember that bank is responsible for taking care of that good. So bank in this case act as a bailey. Bailey means the one who received the good, and the customer is acting as a bailer. Bailer is the one who is giving the good. Here, the vice versa is not true. So, in case when a customer is depositing some valuable items to the bank for the safety of that particular item, in this case, because the customer is giving, customer is a bailer and the bank is receiving, so bank is a bailee, and the contract is known as contract of bailment. Okay, vice versa is not true. Next, agent principal relationship. Now, first of all, what is an agent and what is an principal? So agent is a person who is acting on the instruction of the principal, and principal is the one person who is giving instruction to the agent to execute some particular thing. Like, for example, I am giving instruction to Manikanta that in my absence you are responsible for taking care of this class. So I am giving instruction, I am a principal, and Manikanta is following my orders. So Manikanta is acting as an agent. Now, in bank customer relationship, always remember bank is an agent. Bank always follow the services or instruction of the customer, and customer is acting as a principal. Now, in which case, for example, the bank is depositing the insurance premium on the behalf of the customer, the bank is paying the regular electricity bill on the behalf of the customer, the bank is responsible for collection of the check on the behalf of the customer, bank is responsible paying club fees on the behalf of the customer, telephone bills, all these things, when the bank is actually rendering these services, okay, on the behalf of customer, it means that bank is an working as an agent of the customer. So customer is giving instruction to the bank that please submit the telephone bill, please submit the electricity bill. Now bank is following the order, so bank is an agent and customer is a principal, vice versa is not true, remember. Okay, next, lesser lessee. Now remember, in bailer bailey, who was bailer and who was bailey? Bailer was the one who is giving the goods, customer was giving the valuable items to bank for the safety. So customer was the bailer and bank was the bailey, remember. Now in lesser lessee, always remember a bank is acting as a lesser, bank is acting as a lesser, and customer is acting as a lessee, and vice versa is not true. Now, in which scenario? Just let's just give an example. For example, a bank has a lease, a bank has a security or a safe deposit locker, right? And bank has given that safe deposit locker on a lease to its customer. Now, in this case, the bank has given the safe deposit locker on a lease to the customer. So, bank has given. So, bank is acting as a lessor, and customer is receiving that safe deposit locker. Okay, and now the customer is depositing their jewelry, precious items on that particular locker. Now, customer is receiving, so customer is a lessee, and vice versa is not true. Remember, Okay, so lessor and lessee. Lessor is bank and lessee is customer. Vice versa, not true. Bailer, bailee. Bailer is the customer and bailee is the bank. Okay, double E means the one who is receiving. OR means the one who is giving. In lesser lessee, bank is giving the safe deposit locker to the customer. So bank is giving, bank is a lesser. Okay. And in bailer bailee, the customer is giving their valuables to the bank for the safety and security. So who is giving? Customer. So customer is a bailer. Vice versa in both the situations is not true. Right? Now, indemnifier and indemnified. Now, for this, we have to understand the concept of indemnity. Okay, now indemnifier and indemnified, there is a contract of indemnity which actually between two-person, one promises to another that if you suffered any loss from any third reason or third party, then their loss will be compensated by this person. So one is promising to another that if you suffered any loss from third party, then this loss will be compensated by this person. So this is known as the contract of indemnity. The one who is promising is called as indemnifier. The one who is promising is called as indemnifier. And the one who received the promise, who received this assurance that okay, my loss will be compensated, that person is called as indemnified. Now in the case of bank customer relationship, when a customer just lost their demand draft, okay, like for example, I'm a customer of a bank, I just lost my original demand draft. Now I go to the bank and says that please issue a duplicate demand draft to me. Bank says that okay, I will issue a duplicate demand draft to you, but on one main thing, that you have to sign a contract of indemnity in which you have to promise, as a customer, you have to promise to the bank that if that original demand draft was found by someone and that person just misuses that original demand draft, due to which bank suffered the loss, now that loss will be compensated by the customer. So once the customer signed that contract of indemnity, the bank is responsible to issue duplicate demand draft to that customer. Now I promise bank that okay, I have lost the original demand draft. Now in case that original demand draft is found by someone and someone misuses that, now that loss will be compensated by me. So I am promising to the bank, so I am called as an indemnifier. So who is indemnifier? The customer is indemnifier. And who is indemnified? Bank is indemnified. Clear? Done? Now this is all the relationship. Very simple. When you deposit money to the bank, you deposit money in your saving or current account. Now you are depositing money, you are a creditor, bank is a debtor. When you receive loan from a bank, you are a debtor, bank is a creditor. Okay, when as a customer you are giving some items for the security of that item to the bank. Now in this case, you are giving, you are a bailer, customer is a bailee. Customer is a bailer, sorry, customer is a bailer and bank is a bailee. When bank is giving safe deposit item or safe deposit locker to a customer, so bank is acting as a lessor and customer is acting as a lessee, right? Now indemnifier and indemnified, always remember, the customer is promising to the bank that I will be compensating the loss if the original demand draft will be misused by some person. So I am promising, I am the indemnifier. Customer is the indemnifier and bank is the indemnified person. Okay. Vice versa situation is true only in one case, that is debtor and creditor. In all the other cases, vice versa situation is not true. Now, when I am ordering bank that please collect the check on behalf of me, or please just pay the telephone bill, electricity bill. Now in this case, I am acting as a principal, customer is a principal and bank is an agent. Okay. Now there are demand deposit and time deposit. Now what is the difference between demand deposit and time deposit? First of all, when we are talking about demand deposit, it is always payable on demand. Okay. Time deposit, it is payable after a certain maturity time period. Demand deposit yields low interest. Okay. Time deposit yields high interest. In saving account, like saving account, it give you low interest, whereas in current account you will receive no interest, whereas in time deposit you will receive a high interest rate. The time period of the time deposit varies from 7 days to 120 days, whereas in demand deposit it includes saving, current, overdue, and claim deposit. These are all considered as the demand deposit, which are repayable on the demand. Clear? So this is the first chapter. Now, if you have any doubt in the first chapter, please ask. Everyone. Network issue. Anyone also have this network issue? Anyone also have this network issue, guys? Only Rigved is having this network issue, or anyone else? Everyone, just please comment. Yes, trustee and bailer bailey concept are same. Yes, trustee. Same situation. A bank is acting as a bailee as well as a trustee. Yes, they are same. Clear? Any doubt in the first unit? If you don't have any doubt, you have to give me a thumbs up, each and every one. If you don't have any doubt, you have to give me a thumbs up, everyone. No issues. Okay, now all good. Any doubt in the first unit, you have to give me a thumbs up if you don't have any doubt. If you have doubt, please ask your doubt. Okay, so can we start this second chapter? AML KYC guideline, everyone. Sorry. Okay, so let's start this unit second, AML KYC guideline. Okay, first of all, let's talk about the stages of money laundering. First of all, what is a money laundering? Money laundering is actually a process where the money is earned from illegal activity, and then it is infused into the banking system, or then it is infused into the economy as it is earned from some original sources. Okay, give me 1 minute, let the azan complete, and then we will start this chapter. Okay, give me 1 minute and then we will start. Okay, Now, am I audible to everyone? Okay, so we were talking about the money laundering. So, money laundering is a process where money is earned from the illegal activity like drug trafficking, any illegal activity, and then it is infused into the financial system, or it is infused in the economy as if it is originated or it is generated from some legal source, right? That is money laundering. Now, the stages of money laundering. So, there are three main stages of the money laundering. Okay. So, in the first stage, it is called as placement. The first stage of the money laundering is called as the placement. Now, here you can see that this person is earning dirty money, means illegal money from some illegal or criminal activity. Now, the first thing is they are depositing the money, this illegal money, into the bank accounts, right? So they are opening bank account, they are depositing money in that bank account. This is called as the placement. Okay. Then after depositing that money into the bank account, they just layered this money with some good transaction, or they just move this money to different bank account for hiding the source of this money. Okay, so they just do what, they just deposit the money, okay, into the bank account, then they just layered this transaction with some good transaction, so that the sources of this illegal money should be hidden, or they just transferred the money from one account to another account to hide the source of this illegal money. That is called as layering. And final thing is integration. Integration means then they collect the money from different bank account, and then that money is utilized for buying some legal asset or for starting some legal business. That is known as integration. Okay, so if I have earned some illegal money, that is the dirty money, then I have opened bank account and placed that money into it, placement. Then I have moved that money into different bank account, layering. Then finally I have integrated that money into one account and just utilized that money for buying a piece of land. That is called as integration. So three stages of money laundering. Okay, now let's talk about the stages of terrorism financing. So, first of all, raising. Raising means the money is raised by the terrorist organization from their sympathizers. So they are raising money from different part of the world. For example, there is a terrorist organization who is based on Japan. For example, now they just raise money from different part of the world from their sympathizer. That is called as raising. Then that money is moved because that party is in Japan, or that terrorist organization is in Japan. So now they do what? They just move the complete money to the Japan, to their original place where that terrorist organization is placed. Okay. Then finally they store money. They store money because the money is collected for carrying out some terrorist activity, right? So until then, the money is being stored in either the bank accounts or in some investment area. Then finally, they utilize the money for the terrorist act. So these are the four stages of terrorist financing. First, they just raise the money, then they move the money to their original country, then they store the money, and finally they utilize the money. Clear? Now, anti-money laundering framework in India. So you know that money laundering is an illegal activity, and for prevention of money laundering there is financial action task force recommendations. FATF is responsible for implementation of the policies in different countries for the protection of this money laundering, and based on FATF recommendation, India also has anti-money laundering guidelines. So first thing is India has the Financial Intelligence Unit India, which is actually set up. This is an organization which is set up to receive the information about various financial transactions. Okay. Now, there is a enforcement directorate. So once the FIU India receive information about any suspicious transaction, that particular transaction is now investigated by the enforcement directorate. Then there are special courts who just what, just pass on the judgment on that particular information. Okay, and they have also the authority to freeze any asset if they think that this asset is brought from the money being laundered. Okay, then finally there are regulators. The regulators of different business activities, they are operating for what? For carrying out all the obligations and guidelines which are obligatory for each business. So every business has some obligations, guidelines, and compliance they have to fulfill under the Prevention of Money Laundering Act. So for executing that or for discharging their obligations, there are regulators of different business activities. So FIU India, Enforcement Directorate, Special Courts, and Regulator. Okay, now money laundering offense, section 45 of Prevention of Money Laundering define this offense as cognizable and non-bailable offense. Cognizable means you can be arrested without any arrest warrant. In this case, if you are in the Money Laundering Act, you can be arrested without any arrest warrant, and it is a non-bailable offense. You will not get the bail also, right? Now, if section 4 is concerned, now section 4 says that there is a rigorous punishment. Okay, if you are caught in this money laundering case and if you are found guilty, then you can sent into the jail for not less than 3 years and not more than 7 years. So 3 to 7 years of jail, and in some special cases it can be as high as 10 years also. So this is section 4 and this is section 45. Okay, now KYC. Know your customer policy. Now, what is a know your customer policy? See, know your customer policy is actually a mandatory step for identifying and checking the identity of the customer. I am going to a bank and I'm saying that my name is Afreen Asmat. I want to open an account. Now, I am giving my identity that I am Afreen Asmat. So the process of verifying my identity, okay, that if I'm claiming that my name is Afreen Asmat, that I am Afreen Asmat, the process of verifying this is called as KYC, Know Your Customer Policy, which is mandatory for having each and every financial services from the customer, right? Now, in the know your customer policies, there are four key elements. The first key element is customer acceptance policy. Customer acceptance policy means first step is the customer is need to be accepted as a customer. For example, I am going to a bank and I am saying that my name is Superwoman. My name is No Name. My name is Harry Potter. Now, these are those names which cannot be accepted. So, in the very first step, I am rejected as a customer. So, the very first thing is customer acceptance policy means the customer need to be accepted as a customer. Okay, no account can be opened in the name of any fictitious or benami name, right? Then, after you are accepted as a customer, now your identity is verified. Okay, now if I have present that okay my name is Afreen Asmat, now the process is there that they are checking, bank is checking my identity. Then after my identity has been checked and verified, now the risk management is done. Okay, risk management means according to my profile, according to my business activity, I am classified either as high, medium, or low risk customer. Okay, for example, I am dealing more in cash, so I am a high risk customer. For example, I am a simple employee who is receiving salary on first of every month. Now I am a low risk customer, right? So depending upon my transactions, I am divided into either high, medium, or low risk customer. And finally, the monitoring of transaction. After after my account is opened, my transaction is being monitored under the KYC policy. Okay, so these are the four key elements: acceptance, identification, management, and monitoring of the transaction. Okay, now organizational setup for anti-money laundering. So every bank should have these two posts for the prevention of money laundering. First, there is a designated director, and second, there is a principal officer. Now, there are different function of designated director. Like designated director is responsible for checking the functional setup for the KYC. They keep all the KYC policy updated. They check that the bank should have a skilled staff for carrying out this anti-money laundering policies. Okay, so these are the function of designated director. Whereas principal officer, they are responsible for the timely implementation of KYC policy. They report the transaction to Financial Intelligence Unit India. They just check out and send periodical report to the management. They keep the anti-money laundering monitoring system updated. So these are the function of the principal officer. Okay. Now, obligation under this act, first of all, to verify the identity of the customer. So every bank should verify the identity of the customer. Every customer is presenting their officially valid document to the bank for the identification process, and every bank need to check that officially valid document that it is correct or not correct. Second, you have to maintain the record of all transaction for a period of 5 years from the date of transaction. For example, as a customer, I have deposited any money today in bank. So bank has to make a record, or bank has to maintain the record of this financial transaction till the period of 5 years from the date of transaction. And third, bank has to maintain the record of all the documents of the identity. Means whatever identity the customer is presenting for their verification, bank has to maintain the record of that all identity also for a period of 5 years. These are the obligation under the Prevention of Money Laundering Act. Okay. Now, when we are talking about the reporting obligation, so certain reports need to be sent to Financial Intelligence Unit India on every 15th of month. In every 15th of month, there are certain reports which you need to send to Financial Intelligence Unit India. The first report is the cash transaction report. So if there is a cash transaction of 10 lakh or more, or there is a series of transactions which all together is 10 lakh or more, then you have to send this report to Financial Intelligence Unit India on every 15th of month. If there is a cross border wire transfer report, so if there is a cross border transfer of rupees 5 lakh or more, you have to send this report to FIU India. If there is any receipt by non-profit organization and that receipt is more than rupees 10 lakh, then you have to report this to Financial Intelligence Unit India. And if you have any counterfeit or fake notes received, then you have to report this to Financial Intelligence Unit India. These are the four reports which you have to send on every 15th to Financial Intelligence Unit India. Right now, PMLA has empowered director that they can just take any action against bank employees or any director if they are not fulfilling or abiding with the guidelines of Prevention of Money Laundering Act. And they can just take any of the directions, or any of the directions, like for example, they can just issue the written warning, or they can just order them that you have to submit this and this report. Okay, or they can just impose a monetary penalty of 10,000 with a maximum of rupees 1 lakh per violation. Okay, so this is the complete chapter. Now if you have any doubt in this chapter, please ask. Everyone, any doubt in this chapter? Prevention of money laundering and the AML and KYC guideline, any doubt in this chapter? Guys, if you have any doubt, please feel free to ask your doubt. If no doubt, please give me a thumbs up. Everyone. So this is just a revision for you all. Everyone, you have to revise, you have to take care that what are the reports which need to be submitted to Financial Intelligence Unit India. Financial Intelligence Unit India reporting obligation, everything. These are some of the important things that you have to, what? You have to learn. Okay, previous slide. Okay, Krishna. Now, PMLA, Prevention of Money Laundering Act, give the power to the Director of Financial Intelligence Unit India that they can take any of these action against bank, their employee, or manager, or director. Like they can impose a monetary penalty also. They can just issue a written warning also to them. That is the implication of non-compliance of PMLA obligation. Clear? Clear? Any doubt? No doubt. Can we move to the next chapter, everyone? Can we move to the next chapter? Yes. Okay. Now, operational aspects of KYC. Now, let's talk about the operational aspects of KYC. What is KYC? We have already discussed, right? And we have discussed the four important element of the KYC. Okay. Now, in this chapter, I'm going to give you the detailed analysis of that important elements. Okay. So we have these elements like customer acceptance policy, customer investi identification procedure, customer due diligence, identification of beneficial owner. For some customer there are enhanced due diligence requirement. For some customer there are simplified due diligence requirement. Then there are customer level KYC and monitoring, and last the periodic updation. Now we are going to discuss each and every point in detail. These are the elements of the KYC. First, the customer acceptance policy. Now customer acceptance policy means customer need to be accepted as a customer. So I have told you that no account is open in benami name. No account can be opened in fictitious name. Like for example, I'm saying that my name is Harry Potter. Now I am rejected as a customer, so that is called as customer acceptance policy. Now customer identification procedure means whatever the official valid document I am presenting for the KYC purpose, the bank required to check that official valid document. If I am presenting my Aadhaar, bank need to check that is this Aadhaar duplicate or authentic. That is the identification procedure. Then the customer due diligence procedure. Due diligence procedure means the overall complete profile checking of the customer. A to Z, from background verification to officially valid document, complete profile checking of the customer is called as customer due diligence procedure. Now, if you are a non face to face customer, non face to face customer, which is also known as OTP based customer, it means that you haven't visited the branch yet for any transaction. You are doing each and every transaction online. Okay, means you are non face to face customer. Now for you, customer due diligence is must, because you are not visiting the bank branch for any transaction. You are doing everything online. So there are certain restriction on the non face to face customer. Very important thing. First restriction is your aggregate deposit should not exceed 1 lakh. Your overall deposit should not exceed 1 lakh. Second, your credit should not be more than 2 lakh in one financial year. And third, you are eligible for a loan up to rupees 60,000 per year. So these are the restrictions which are imposed on you. Very important. Second, what are the documents which are actually accepted for the officially valid document for KYC? So passport is accepted, driving license is accepted, Aadhaar number, voter identity card, job card by Narega, and letter issued by National Population Registrar. Remember, PAN is not accepted as an officially valid document for KYC purpose. Very important. Okay. Now, simplified and enhanced due diligence requirement. So there are some customer for which enhanced due diligence requirement is necessary. Means these are those customer who are mostly dealing in cash, who are non face to face customer. For them, enhanced due diligence is required. But there are some customer for which simplified process are there. For example, there is a student. Now, for that student, simplified due diligence requirements are there. Means there are not extra step for their verification. If there is a self-help group account, then simplified due diligence. If there is an account of foreign students who are studying in India, okay, so for them there are simplified due diligence. Okay, now for them there is a compulsion that you have to declare your local address within 30 days of opening the NRO account. NRO account is offered to the foreign student. First of all, passport is required, endorsement, photo, admission letter is required. You have to declare your local address within 30 days. And for you, foreign remittance exceeding $1,000 is not allowed. You are allowed to have a foreign remittance of up to rupees $1,000, and in rupee it should not be exceeding 50,000. Okay, now for a person, if you don't have an officially valid document, if you have a small account, okay, now for those person, simplified due diligence are there. Okay, now if you don't have any officially valid document, still you are able to open the account, and that account is called a small account. And there are certain restrictions on the small account. First of all, your credit limit is not exceeding 1 lakh annually. Okay, your transfer limit should not be exceeding 10,000 monthly. Your balance limit is not exceeding 50,000. Okay, then foreign remittance is not allowed. Okay, and you have to submit your official valid document within 12 months of opening the small account. Okay, so if you don't have the OVD, still you can have the small account with these certain restriction, but you have to deposit the OVD within 12 months of opening the account. Okay, then we have the periodic updation, very important. Okay, periodic updations means for every, you know that for every customer, the account is classified into either high risk, medium risk, or low risk customer, right? So, if you are a high risk customer, you are dealing mostly in cash. Okay. So now your periodic updation should be done in at least a year. If you are a medium risk customer, your periodic updation should be done in every 8 year. And if you are a low risk customer, then your periodic updation should be done in at least 10 year. Very important. Okay. Next, central KYC record registry, very important. See, when you are submitting your documents for KYC purpose, did you ever wonder that where these are stored? So these are actually stored in Central KYC Record Registry, which is authorized entity for storing, safeguarding, and retrieving your KYC record. Okay, whatever you are submitting to the bank for the KYC process, that complete record is actually maintained, stored in Central KYC Record Registry. And the Government of India has authorized CERSAI, Central Registry of Securitization Asset and Reconstruction and Securities Interest of India, this CERSAI, for performing the function of Central KYC Record Registry. Okay. Now, next, record management. Very important. Every bank has to abide by the rules and the conditions of PMLA and PMLR, Prevention of Money Laundering Act and Prevention of Money Laundering rules. Right now, you have to maintain the record of each and every customer for a period of at least 5 years, and you have to preserve the identity and the address record of that customer for a period of 5 years when you have ended the business relationship with that customer. For example, I have closed my account in a bank today. Still, bank has to maintain the record of my identity for a period of at least 5 years. That is called as record management. Now, if you have any doubt here, please ask. Now, ma'am, within how many days OTP customer need to do due diligence by visiting bank? No, this is not the main thing which is given in your book. See, the main thing is given is if you are having the small account, you have to submit the officially valid document within 12 months of opening the small account. Due diligence days, it's not given. Okay. Central KYC record registry. So if as Shri, you are depositing your, for example, Aadhaar for the KYC process. Now your KYC is received, stored, and safely safeguarded by this central KYC record registry, which is a entity which is authorized to maintain the record of the customer for the KYC process. And for managing the function of central KYC record registry, there is CERSAI, Central Registry of Securitization, Asset Reconstruction and Securities Interest of India. Okay. Any more doubt? Guys, if you have any more doubt, please ask. Or just please give me a thumbs up. If you don't have any doubt, just please give me a thumbs up. And if you have any doubt, kindly ask your doubt. Each and everyone who is watching this session. Each and everyone who is watching this session. If you have any doubt, just ask. If you don't have any doubt, please give me a thumbs up. I am waiting for all of you. Done? Can we move to the next chapter? Can we start the next chapter, everyone? Can we start the next chapter? Okay, so that is opening the account of various type of customers. So as a banker, you are dealing daily with different type of customer. A blind candidate, illiterate person, there is a Hindu undivided family, Pardanishin woman, minor, major, older persons. So what are the terms and condition for the opening the account of various type of customers, right? So we are going to discuss this in this unit. Okay, first, account of individual. The account of individual can be opened in single or joint. Okay, it should be measured by age, should be of sound mind, should not be declared insolvent, and should not be disqualified from contracting any law. It means that you are not a minor by age, because a minor is disqualified from contracting by any law. Okay, now in certain situation, like if there is an individual which don't have a sound mind, or if there is a minor, there is a court appointed guardian, okay, or natural guardian who can act on the behalf of that particular customer. KYC is needed for the customer also and for their guardian also in case, right? Now, joint account holder, you know that a joint account can be opened by two or more individual. Okay, now it is advisable that you can know the relationship between that two-person, if that two-person is a business partner, or they are husband wife, or they are mother father, or they are whatever. Okay, you just need to know the relationship among the joint account holder. And it is advisable that you should must know the expected amount of fund that should be there in that joint account. A joint account form should be opened by all the account holder, remember, right? And the joint account generally are given with all the account holder being the resident in India. But if there is a resident in India who want to open an account with any NRI, that is also permissible, but there should be a close relationship between that two-person. For example, you are living in India and your husband is a NRI. So you are allowed to open a joint account because you have the close relationship. Okay, next. Account of illiterate person. Account of illiterate person can be opened. Okay, first of all. Second thing, as a banker, you need to explain the terms and condition of that account in whatever language the person is comfortable. And it is advisable that for every time that person, illiterate person, want to withdraw any amount, they have to come personally to the bank with a passbook. And a current account, remember this, a current account should not be opened in the case of illiterate person. Checkbook is not issued to a illiterate person, and the thumbnail, the left thumb impression is taken of that illiterate person for the account opening process. And every withdrawal should be confirmed orally by that illiterate person. Okay. Now, account of a blind person. Again, a blind person is allowed to open the account with the bank. If the branch manager is satisfied, okay, then he may allow the blind person to operate the account by himself or herself. And the signature and thumb impression of that blind person should be taken by in the presence of any one person which is very well known to the bank. This is the process for a blind person. Okay. Now, account of a minor. See, there is a basic criteria that if you have the age of 10 years and above, bank can open and give the operation of that deposit account to that particular minor person. But again, it is now up to bank also that they are free to decide in which age they allow that minor person to open and operate the account. Basic age is 10 years and above. Now some bank fix 12, 13, 15, some even fix at 18. So this is allowed. Okay. Now remember, KYC is needed for both the minor and the guardian. Okay. Father is considered as the natural guardian, but in case the father is not present, mother can also act as a natural guardian. And here the term mother and father does not include a stepmother and stepfather. The minor should be literate. He should not be illiterate. Okay, the minor should be literate. And two minor together cannot open the joint account. Remember this. Two minor cannot open the joint account. Okay, next. Rule for operation of the minor's account. First of all, overdraft is not allowed. A minor can draw a check. Okay, if the minor attains the majority age, means once they have completed the age of 18 years, then the guardians is not allowed to operate the account without the confirmation of the minor, who is now a major. Bank are free to fix the minimum age at which they allow the minor to operate the account independently. Basic is 10 year and above. Up to that, bank are free to fix the minimum age. Okay. In case of death of the minor, the guardian has to close the account. They cannot continue the account. If the minor dies, then the guardian has to close the account. Okay. And if the guardian dies, okay, whatever the money is in the minor's account, it is paid to the minor once he achieves the age of maturity, right? So these are the rules of operation for the minor account. Then we have Hindu undivided family. What is a Hindu undivided family? When a Hindu dies, okay, they leave a business behind, then that business pass on to their family, okay, and then it is converted into a Hindu undivided family. In a Hindu undivided family, the manager of HUF is called as the karta and other members are called as the co-partners. Always remember, the manager is the eldest male child of that particular family, right? And that karta has unlimited liability. And the other family members are called as co-partners, and they have limited liability to the extent of shares they have in that Hindu undivided family. Means they have no personal liability. Whereas karta, they have unlimited liability, right? Sole partnership firm is actually a firm which is operated by a individual person, and the account of sole partnership firm is proprietorship firm is treated as the account of individual. So whatever the rules and conditions which is applicable to the individual account, the same rules and applications is applicable to the sole proprietorship firm account. Okay, now what are the documents needed for opening the account of this particular firm? So current account is open because it is for the business purpose, and if it is a current account, no interest is given by the bank. Signature is needed and the proprietorship declaration letter is needed by the bank. Okay, ma'am, two minor or one guardian open the account? No, two minor cannot open the joint account. Okay, partnership firm. Now, partnership means a relationship where two or more partners decide to agree or agrees to share profit and loss. Okay, so when two or more person decided to share profit and loss in a business, then they are called as the partnership. It is governed under Section 4 of the Partnership Act 1932. Registration of partnership is optional, but it is mandatory in the case of Gujarat and Maharashtra. So if you are living in these two states, then the partnership registration is compulsory. Now, Partnership opening account form should be signed by all the partners, 2, 3, 4, 5, 6, whatever the number of partners, it should be signed by all the partners. Okay. Second, remember this, if there is a dispute among the partner, and even if one partner gives that instruction to the bank that please stop the transaction in the partnership account, the bank has to immediately stop the transaction in the partnership account. And again, when they have to restart the transaction, all the partners should give a joint consent to restart the operation in the partnership account. Okay, so it is stopped by single individual partner and it should be restarted by all the joint partners. Okay, then if there is an addition of any new partner to a partnership firm, and if the old account has the credit balance, remember, a new partner is entered, okay, into a partnership, the old account, if they have the credit balance, then that old account can be continued. Okay, but if the old account has debit balance, then that old account should be stopped and the liabilities of every partner is determined and a new account is opened with the new partners. Okay, so two cases, if credit, then they can just add the partner and just continue the older account. But if there is a addition of the partner and there is a debit balance in the account, right, then you have to freeze the account, you have to stop the account and open a new account. Clear? Death of any one partner dissolve the complete partnership. Okay, so in this case the operation in the account need to be stopped. Every partner's liability is decided and the bank can just allow the transaction in the new bank account. Okay, that is the partnership form. Limited liability partnership. What is a limited liability partnership? Where the liabilities of the partners are limited to the extent of share they have in the partnership or to the extent of contribution they have done in the partnership. That is an LLP. Okay, now LLP should have at least two designated partner. In a LLP you will find a small limited liability partnership. A small limited liability partnership is a partnership where the contribution of partner should not exceed 25 lakh, and if it is exceeding 25 lakh, it should not exceed the topmost limit, which is 5 crore. So first there is a limit 25 lakh, so you should not be exceeding 25 lakh. But if you have exceed this limit, you should not be exceeding 5 crore at any cost, and your turnover in the preceding financial year should be not more than 40 lakhs. But if you exceed this limit, it should not be exceeding 50 crores in any case. So there are two limits which are given for a small limited liability partnership. The contribution should be 25 lakh and the turnover should be 40 lakh, not more than this. But in case you are exceeding this limit, there is another limit. Your investment should not be exceeding 5 crore and the turnover should not be exceeding 50 crore. Clear? Done? Now, limited companies. So we have public, private, and one person company. Public limited company, first of all, requires minimum of 7 members. Maximum, there is no limit. Okay. Now, in a company, if the holdings of the government is 51% of more, then it is called as a government company. Okay, private limited company needs 2%, minimum of 2% to open, and maximum of 200 members. 1% company is a company which is operated by 1%, and 1% company is a private limited company, remember. Okay, now very important is legal entity identifier. Legal entity identifier, it is actually a 20-digit alphanumeric code. And this code is actually given to the parties for their unique identity, okay, to sending money across the world. Okay, so if any company or any corporate is actually paying or moving the money of 50 crores and above by using RBI's RTGS or NEFT, then for them, legal entity identifier is must, which is a 20-digit alphanumeric. Clear? So this is the complete chapter. Now, if you have any doubt, please ask everyone. And if you don't have any doubt, please ask everyone. Any doubt, guys? If you have any doubt, please ask. No doubt, give me a thumbs up. Legal entity identifier, first of all, is a 20-digit alphanumeric code. Second, it is needed for those corporation if they are transmitting or remitting the money of 50 crores and above by using RBI's RTGS or NEFT route. So if you are transferring the money of rupees 50 crores and above across the world by using RBI's NEFT and RTGS, then for you, there is a unique identification code which is known as legal entity identifier, okay, which is a 20-digit alphanumeric code. Any doubt? Yes. Yes. It is 50 crores and above in one go, not aggregate. In one go, if you are just transferring 50 crores and above. Okay, done. Can we move to the next chapter? Operational aspects of deposit account. Okay, so let's start discussing operational aspects of the deposit account. Current account. First of all, current account is given for the carrying out business activities. Okay, no interest is payable in the current account. And who is not allowed to open the current account? First of all, minor. But there is some flexibility which is given to minor. In case it is the necessity that minor need to have a current account, then the current account can be opened by a minor, but it is operated by the natural guardian. Parda Nashin woman is not allowed to have a current account. Illiterate person, no. Blind person, no. So these are not allowed to open the current account. There is no restriction on withdrawal and deposit amount in the current account. Okay. Saving bank account. Saving bank account for inculcating saving habits in you. And it can be opened by individual or in joint name. It can be opened with check facility and without check facility. Okay, deposit you can do in cash, check, through electronic transfer. Interest is paid in the saving deposit account. Okay, remember, every bank has to offer a uniform interest rate if you have a deposit of up to rupees 1 lakh. If for a deposit up to rupees 1 lakh, every bank has to offer a uniform interest rate. And for over and above 1 lakh, bank is free to choose the differential interest rate policy. Okay. Now, who are eligible to open a saving account? Single or in joint name, minor if they are aged 10 years and above, Karta of Hindu undivided family, or any entities which are giving authorization by Reserve Bank of India. Okay, next, basic savings bank deposit account, which is different from saving account. So it is for actually increasing the financial inclusion across India. Basic saving bank deposit account, you don't have to maintain any minimum balance. Plus different type of free services is offered in BSPD account, like cash deposit, ATM withdrawals, depositing, etc. There is no limit on the number or value of deposit in the month. So there is no limit on the number or value of deposit in a month for BSPD account. Our minimum of 4 withdrawal per month is allowed, including the ATM withdrawal. Bank are can offer the value added services in BSBD account, but it is up to the customer that he can choose or even reject that value added services. Okay. Now, BSBD account do not require any minimum balance, and every individual can only have one BSBD account. And if you have the PSBT account, you cannot allowed to have a saving account. So as soon as you have opened the PSBT account, you have to close your saving account within 30 days of opening the PSBTA account. Clear? But you are allowed to hold other type of deposit. Like you can hold a FD alongside of PSBTA, but not a saving account. Clear? Next. FDs. FDs means which have a maturity period, which are payable after a certain period of time. Minimum period for accepting an FD is 7 days, maximum 120 month. right? Now, FD in case of commercial bank and small finance bank. If you have an FD of 3 crores and above, then it is considered as a bulk deposit. And in case of RRB, Regional Rural Bank, if you have an FD of 15 lakhs and above, then it is considered as a bulk deposit. Okay, so scheduled commercial bank and small finance bank, 3 crores and above, then it is a bulk deposit. And in case of RRB, it is 15 lakhs and above, then it is a bulk deposit, right? Now, premature withdrawal option, the bank should give or shall offer the premature withdrawal option in the case of FD. But but if you have an FD of 15 lakhs or below, then the premature withdrawal facility is must for you. Okay, so bank can offer the premature withdrawal facility, or bank cannot offer the premature withdrawal facility on an FD account. But if you are having an FD of 15 lakhs or below, then the bank must give you this premature withdrawal facility. Okay, recurring deposit. Now, what is a recurring deposit? Recurring deposit is actually a deposit where a customer is depositing a small amount, a fixed or regular amount every month, okay, for a fixed period of time. That is called as a recurring deposit. For example, I am depositing 2000 rupees every month for a period of 3 years in an account. That is called as recurring deposit. Okay, annuity deposit, reverse of recurring deposit. When as a customer you are receiving a regular payout, okay, on a monthly or a quarterly basis for a predetermined period of time, that is known as annuity deposit. Means when you are depositing, that is recurring, and when you are receiving a regular payouts on a monthly or periodic or quarterly basis for a certain period of time, then it is called as annuity deposit. Okay, certificate of deposit. Certificate of deposit, you know that it's a money market instrument, and it can be issued by scheduled commercial bank, regional rural bank, small finance bank. The minimum amount you can invest in a certificate of deposit is 5 lakh, and in a multiple of 5 lakh. The time period is, it is minimum for 7 days and maximum for 1 year, and it is actually maintained by FIMDA, and they are dealt in the secondary market. Clear? Now, interest on the deposit account. First of all, interest on the current account. No interest is paid on the current account. First of all, interest on the deposit saving account. Saving account, yes, interest is paid. For the 1 lakh up to 1 lakh, bank has to pay a uniform interest rate. And for over and above 1 lakh, bank can follow the differential interest rate policy. Okay. Now, interest on the deposit term account. Okay, so yes, you are having a high interest rate on FDs. It depends upon that for how many period or how much time period you have taken that FD. The bulk deposit, if you have deposit more, you are receiving more interest. If you have deposit less, you are receiving less interest, right? Premature withdrawal facility is a must and mandatory if you have an FD of 15 lakhs or okay, and no interest is paid to you in case of FD if you have prematurely withdraw that FD within 7 days. Okay, now additional interest on the domestic deposit. For staff it is 1%, for senior citizen it is 0.25 to 0.5%. If there is any account which is freezed by the bank for any purpose, for example, for the non-satisfactory compliance of that particular thing, or if you are not fulfilling the OVD for that particular account. So if there is any account which is frozen by bank, still bank has to credit the interest regularly on that particular freezed account. Remember this, okay? Lastly, we have DEF, Depositor Education Awareness Fund. Now, DEF is what? DEF is actually when there is a untouched account, or you can say a dormant deposit for a period of 10 years. You haven't done a single transaction for a period of 10 year in any account, then that account is considered to be a dormant account, and the fund of that account is transferred to DEF, Deposit Education and Awareness Fund. And whatever the fund which is received in DEFT is utilized for the education and awareness program. Okay. Now, if you come back and you say that no, 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 I want my money back, okay, then the bank has to give back the fund to that particular customer so that they can claim reimbursement from the deaf account, and then the money is being transferred to the customer. Clear? So what is depositor education and awareness fund? The fund of the dormant account or dormant deposit is transferred after 10 years to the deaf account. Okay, rate of interest is payable at the rate of 3% simple interest. Okay, the bank can claim the refund from the deaf account in Indian rupees only, and the depositor can claim either in Indian rupee or in foreign currency equivalent. Okay, so that is the deaf account. We have garnishee order. What is a garnishee order? First of all, a garnishee order is actually an order which is issued by court to a garnishee. Garnishee means bank. So there is a garnishee. Garnishee is who? Garnishee is a bank. So there is an order which is passed by the court in favor or to the garnishee, which is called as the bank, right? That this bank has to freeze a certain amount in the debtor's account and directly crediting it into the creditor account, okay, for the settlement of this debtor creditor relationship. Actually, for example, there is a person A who just give money to B. Now B is not returning the money of A. Okay, now what? Now A can go to the court for having the garnishee order. It means that first of all, the court just identify that in which bank this debtor has an account. For example, there is a ABC bank. Okay. Now this bank is called as garnishee. So court ordered this ABC bank that you have to freeze a certain balance in this B's account, which is the debtor, and directly crediting it to the creditor account so that the debtor creditor relationship is settled. That is called as garnishee order. And in a garnishee order, there are two steps. First, the court pass order nisi. Now, first the order nisi is received, then you have to present your side in front of the court. And finally, the garnishee absolute is passed, in which the court is giving order to the bank that you have to freeze a certain amount in debtor's account and crediting it to the creditor. That is the garnishee order. Okay. Now, if you have any doubt in the whole chapter, please ask. Ma'am, there is no limit on the number and value of BSPD account. Yes, Ruchi, there is no limit on the number and the value of the deposit in BSPD account. Means you can deposit as much money as you can in the deposit account. There is no limit on that. You can deposit 2 times, 3 times, 10 times, 12 times, 15 times, 20 times. Again, there is no restrictions on that. Okay, withdrawal, minimum of 4 withdrawals are allowed, but for depositing there is no restrictions. Okay, done. 4 withdrawals are allowed. This is the maximum of 4 withdrawal. Okay, 4 withdrawal, maximum of 4 withdrawals are allowed. Okay, any more doubt? No, aggregate credit is not there. Amount of deposits in BSPDA, there is no restriction on the amount, means value or the number of deposit in BSPD account. But there is a restriction on the withdrawal. A maximum of 4 withdrawal is allowed in BSPD account. Okay, done? Clear? Any more doubts? Any more doubts, guys? If you have any more doubt, please ask. Is there garnisher? No, garnishee, that is bank. Garnishee. Court is ordering garnishee means bank that you have to freeze a certain amount in the debtor's account and directly crediting it to the creditor account. I have given money to you. You are not returning money to me. Now I go to the bank for having the garnishee order. Now bank has identified that okay, yours account is in HDFC Bank. So bank has given the order to HDFC Bank that please freeze 10 lakh rupees in your account and directly credit it to my account. This is the garnishee order. Okay, done. Okay, now let's talk about this unit 6 operational aspects of handling, clearing, collection, check. Okay, first of all, check truncation system. Truncation means the process of eliminating the physical movement of check by the electronic and scanned image of that check. That is called as the truncation. Okay, now when we are talking about the characteristic of the truncation system, so in the check truncation system, you are not moving the physical check in the clearing process. Instead of the physical check, the scanned image of that check is actually rotated for the clearing process. So it is an electronic image. Okay, only the bank and the clearing house they are allowed to scan the image. Okay, drawer and the holder they are not allowed to scan the image. Okay, then the truncation is done only in the clearing cycle. Okay, the paper check after being truncated is kept in the safe custody of the clearing house or the bank, and the addition of the digital signature is optional in the check truncation. Okay, now what is the process of CTS system? So first, there is a presenting bank. The work of the presenting bank is to scan the image of the check and enroute that image for the clearing process to the clearing house. Then the clearing house receive that scanned image of the check, analyze the complete data, arrive on a settlement figure, and then forward it to the paying bank. Once the paying bank receives the data from the clearing house, if satisfied with the data, the paying bank cleared the check. But if the paying bank is not satisfied, then the paying bank just initiate a return cycle of that check. Return cycle means the paying bank return this check to the clearing house. Then the clearing house return this check for to the presentation bank. Okay, so this is known as presentation clearing, and this is known as the return cycle. And this complete presentation clearing plus return cycle is called as one complete clearing cycle. So the presentation bank scan the image, give it to the clearing house. Clearing house settle the figures, give the figure to the paying bank. Paying bank satisfied pays the bill, pays the check. But if not satisfied, create a return cycle. Paying bank return it to the clearing house return it to the presentation bank. So this is known as presentation clearing, this is known as return clearing. They both together is called as the once clearing cycle. Okay, and the complete scanned image has an advanced security feature to prevent the safety and security of that particular check. Okay, and at the time of scanning of the check, there is a single line which is always endorsed at the back of the check, which is the unique identifier of that check. Okay, now CTS check image. So there are three images to be taken of that check: front grayscale, front black and white, and back black and white. So these are the three image of the check should be taken for the clearing process. Okay, image should go through a rigorous quality check, and if not satisfied, they can just reject that check, or even if the paying bank is not satisfied, they can demand the physical check also for the clearing process. And the complete scanned image has a public key infrastructure for data and image security. Clear? Now, positive pay system. What is positive pay system? Reconfirming the details of the large value check. So when there is a large amount check, so for reconfirming the details of the check, like date, amount, to whom it should be transferred, etc. So the when complete details of the check is rechecked or reconfirmed, because it is a large value check, then it is called as positive pay system. Okay. And the bank should make this facility available for all the check of the value 50,000 and above. Now, if it is up to the customer that they can choose the positive pay system or not. But if the value of check is 5 lakh and above, then it is mandatory for the checks to have the positive pay system. It is available for all the check if 50,000 and above, but mandatory for only the value of 5 lakhs and above. That is CTS positive pay system. Then there are different guidelines for RBI for the collection of the check. First of all, payment of the check, draft, pay orders, banker's check. See, always remember 6-month time period. A check is valid for the date or for the period of 6 months from the date of instrument. Okay, it was the earlier guideline. Now it is 3 months. Okay, so if you have present a check for the payment and if it is within 3 months from the date of issue, then it is a valid check. And if it surpasses this, then it is a invalid check. 3 months now, earlier it was 6 months. Okay, now bank should have a proper clearing process. Okay, and in a case the check is lost in the transiting process, the bank has to immediately inform the account holder for passing the stop payment instruction of that check. Okay, and the complete loss, if there is any loss, okay, that complete loss is actually in the shoulders of the bank, because the bank has lost the check in the clearing process. Okay, next, cash and its custody. So we have general guidelines for keeping the cash in the bank, like it should be a strong room, there should be a surveillance system, proper camera, there should be only authorized person allowed in that area, and no other other than the cashier or the teller can receive the money from the customer. So these are the general guidelines that you all know. Okay, now cash balance at the bank, it should be checked. First of all, the supervising official should personally count all the denomination of the cash. If it is 100 and above, okay, then they have to verify it at the working day closing, and once in a week they have to complete check the cash which is present in the bank and check it, recheck it with books of account. Okay, this is the complete chapter. Now, if you have any doubt, please ask. Everyone. Any doubt, guys? If you have any doubt, please ask. No doubt, just please give me a thumbs up. Each and every one of you who is watching this session. Any doubt, guys? If you have any doubt, please ask. No doubt, please give me a thumbs up. Okay, now can we start this next chapter? Banker special relationship. This is unit 7. Okay, now in this, first is mandate. Mandate is simple and authority given by account holder in favor of third person to act a certain function on his or her behalf. Okay, okay, so for example, I'm leaving to USA tomorrow, so I just want to inform that bank that on my absence, in my absence, my sister will be operating my account. So this is actually informed to the bank by the way of mandate. Okay, so mandate is an authority given by account holder in favor of third person. Okay, now the signature of mandate is very compulsory. Mandate is the one person who is receiving the instruction to perform some function, like I am giving authority to my sister, so sister is a mandate. Okay, mandate is for a shorter period of time, and mandate cease to be valid if there is a death, insanity, insolvency of the account holder. Okay, and a mandate, they can be withdrawn anytime by the account holder, and always remember it is a unstamped agreement. Okay, next, power of attorney. Same thing. Powers of attorney again is a document executed by the one person. okay, in favor of another person, that you have to perform on his or her behalf. For example, I am giving authority to Manasi, okay, my CA. For example, Manasi is my CA, that you can just perform certain function on my behalf. So I am giving authority to Mansi. So I am called as the donor or the principal, and Mansi is called as the donee or the agent who is working on my behalf, right? Power of attorney, the difference between power of attorney and mandate is, first difference is power of attorney is a stamped agreement, whereas a mandate is a unstamped agreement. Okay. Second, when we are talking about power of attorney, it is executed for a series of transactions, generally for more than one transaction. But the mandate, it is given for a one or two transactions, right? Generally, okay. But in a power of attorney, you will find a general or a specific transaction. General power of attorney means when I am giving full authority that, okay, you can just completely act on my behalf. Whereas a specific or limited power of attorney means I'm giving authority to you to perform certain thing on my behalf. Okay, like two or three things. Only that certain thing. That is specific power of attorney. Always remember, power of attorney is a stamped agreement. Mandate is an unstamped agreement. Okay. Now, when we are talking about banker's lien, what is a banker lien? Banker lien means there is a right of banker, means you all. You have the right to retain the possession of the goods until the debt of the debtor is fully paid. It means that, for example, I have given you the gold, and on that I have received a loan. Now, you as a banker has the right to retain the possession of that good or that gold until I fully repay my debt. That is called as the banker's lien. In banker's lien, we have general and particular. General banker's lien, it can be for any goods billed. It means that you can, as a banker, you can just retain the possession of any good of mine. Okay, that is general lien. Whereas particular lien means you have the right to retain possession of only that good which is kept as a collateral for that loan. Okay, that is called as particular lien. Now, right to set off. What is the right to set off? For example, I have two accounts in same bank. Okay, one account shows a debit balance of 1,000. Another account shows a credit balance of 3,000. Okay, they both are in my name. So now the bank can execute their right of set off. It means that bank can set off the debit balance of this account with the credit balance of this account. Now, after setting off, this account shows zero balance and this account shows 2,000. That is called as right to set off. Setting off the debit balance of one account by the credit balance of another account. Okay. Now, right of appropriation. What is a right of appropriation? For example, I have a pending EMI of rupees 20,000 in my bank account. Okay, I have a pending EMI of 20,000. Now I have deposit 50,000 in my bank account without specifying the bank that for which purpose I am depositing this money. And if no instruction is given to bank for this money credited, then bank can exercise their right of appropriation. It means that bank just appropriate the pending EMI of 20,000 with the credit balance of rupees 50,000 or with the credit of rupees 50,000 which I have given in my bank account. That is known as right of appropriation. Okay, so this is the complete chapter. Any doubt in this? Bankers lien, set off, appropriation, mandate, and power of attorney. Any doubt in this? If you have, please ask. No doubt, give me a thumbs up. Everyone. No doubt. Donor and donee, Ruchi. Simple thing is, for example, Ruchi, you are my CA. I am giving you the authority that you can operate my account on my behalf. So I am giving you the authority, right? So I am called as the principal. You are acting as an agent. or I am called as a donor and you are donee. And this is given by the way of power of attorney, which is a stamped agreement. Appropriation, Mansi. If I have a pending EMI of 20,000 rupees in my bank account, now I have deposit 50,000 rupees in my bank account without specifying the reason for that. Now, in this case, you have the right that you can adjust my pending EMI with the credit of rupees 50,000. Okay, that is the right of appropriation. Clear? Done? Okay. So let's move this operational aspects of NRI business. Okay. So in this, we are going to discuss the important accounts like NRE account, non-residential external rupee account. So NRE account can be given to NRIs and person of Indian origin. This can be saving, current, recurring, and FD account. And for what purpose NRE account is given? NRE account is given for transferring the earnings of NRI to India. Okay, so if you are a NRI, you want to transfer money to your parents who are living in India. For this, you can just have a NRE account in India. Okay. Next, NRE account, the minimum tenure of term deposit is 1 year. Okay. Interest rate is differential. Additional interest rate is not allowed in NRE account. Premature withdrawal of the term deposit is allowed subject to the penalties. Right. Now we have NRO account. NRO account, it can be given or it can be maintained by any person who are residing outside India if they are doing the transactions which are denominated in Indian rupee. So if you are doing any transactions which are denominated in Indian rupee and you are living outside India, you are a person resident outside India, then for you NRO account is given. It can be saving, current, term deposit, recurring deposit. The minimum time period for a term deposit in NRO is 7 days. In NRE, it was 1 year. Remember? Term deposit, again, differential interest rates are offered. Okay. Ceiling is you cannot, as a bank, you cannot offer a higher interest rate than the domestic interest rate. Additional interest rate not allowed in the NRO account. Okay. Now, difference between NRE and NRO account, simple. It is non-resident external account. It is non-resident ordinary account. It is actually given to NRI to transfer their earnings to India. It is actually given to NRI to manage their income earned in India. You are living outside India. You have a property in India. You are earning rent from that property. Now, for managing your earnings in India, because these transactions are rupee denominated, NRO account is offered. Here, interest is tax free. Here, interest is taxable. NRE account, whatever balance in the NRE account can be repatriated outside India freely, but there are restrictions in the NRO account. There are some restriction, there are some limit for transferring the amount which is in the NRO account. Okay, the joint account can be opened by two NRIs. Here you can open with NRI along with the Indian citizen. Okay, here withdrawal and deposit in the NRE, you can deposit in foreign currency and withdrawal in Indian currency. Here you can deposit in foreign as well as Indian currency, but withdraw can happen only in Indian currency. Okay. Yes, recurring deposits are allowed for the NRIs. NRIs are allowed to have a NRO. NRO can be a recurring deposit account. Okay. Next, there is FCNRB account, foreign currency non-resident account bank scheme. So what is an FCNRB account? So if you are a NRI, okay, and if you wish to maintain a FD account in India, but at the same time you want to have the currency in the same you have earned. Okay, you don't want to convert it into Indian rupee. You want to have a FD in India, at the same time you want to have in the same currency you have earned. Then for that, FCNRB account is offered. Remember, FCNRB account is a deposit account, term deposit account. It is not a saving account. Okay, next, the time period for FCNRB account, you can have in 1 years and above 1 year but less than 2 year, 2 year and above 2 year but less than 3 year, 3 years and above but less than 4 year, 4 years and above, but less than 5 year, and 5 years only. These are the blocks which are available for a deposit account of FCNRB account. Okay. Next, SNRR account is special non-resident rupee account. Now it is offered to the foreign national. First of all, it is not offered to the NRI. For NRI, we have NRI, NRE, NRO, FCNRB account, but SNRR account is actually offered to the foreign nationals or entities who are doing the regular business transactions with individual or with Indian entities. Okay, so if you are a foreign company, you are having a regular transactions with Indian company, then you can have a SNRR account in India. Okay, and it is for the business transaction. So it is a current account, and if it is a current account, no interest is paid, right? So it is actually available to those person who are having the foreign exchange. Okay, prohibition: you cannot transfer your NRO account, the deposit from NRO to SNRR account. You cannot do this. It is prohibited. No interest is paid because it is a current account. The balance in this account can be freely repatriated, and all the transactions are subject to applicable taxes. Now, very important thing: what are the sectors which are prohibited for investments? Okay, so if you are a NRI, PIO, or overseas citizens, what are the sectors which are prohibited for the investments? Okay, so we have lottery business, okay, gambling, chit fund, nidhi companies, TDRs, then cigars, or tobacco business, or those activities which are not open to the private sectors like atomic energy or railway. So these are all the prohibited sectors for investments. Okay, so there was one PYQ from this particular slide. Okay, so this is the complete chapter. Now if you have any doubt, please ask everyone. NRE can open account with Indian. Yes, they can open. Huh. Any more doubt? Any more doubt, guys? Can two NRI open the NRO account? Yes, they can open. Can NRE open CA? What is CA? Current account. Yes, NRE can be in the form of current, saving, recurring, FD account. Yes. SNRR account C. SNRR account C. If you are a foreign national and you are doing a regular business transaction with Indian entities, then for you there is SNRR. Okay, permissible credits in the NRO, in the NRE, in the debit account, the usual credits and debits are allowed. Okay, and that's why I have skipped that slide. Not relevant, not much relevant. Okay, or I will frame one or two questions in the MCQ session based on it so that you can just get a revision. Okay, done. Any more doubts, guys? Can we start this chapter, cash management services and its importance? Unit 11. Okay, so cash management services and its importance. Simple thing. What is cash management? Cash management is actually a process of collecting, concentrating, and disbursement of the cash. When you are collecting, when you are storing or concentrating, or when you are dispersing the cash, the complete process is called as the cash management. Okay, now in this cash management topic there is nothing important. Okay, why? Because usual things are given, that okay, why cash management is important. Okay, so cash management main thing is for optimizing the liquidity, for increasing the cash inflow, for decreasing the cash outflow. So that is the cash management thing. Okay, so there is nothing important in this cash management, only 2 to 3 page chapter. Okay, you can just skip this chapter completely. Okay, and I will frame up one question in as a MCQ on the final marathon based on this cash management. Okay, now let's have this particular topic, very important, Unit 12, payment and collection of checks and other negotiable instrument. Very, very important topic. Okay. Now, first of all, what is a check? When we are talking about the check, so check is actually a written instruction which is drawn on a banker that you have to deduct, you have to pay a certain amount from the account holder's account and credit it to the holder of that check. Okay, that is called as the check. So written instruction given by the account holder to his or her bank that you have to make payment from his or her account to the holder of that check. And check, you know that what is CTS, check truncation system, when the physical check is actually replaced by the scanned image of the check. Okay. Now when we are talking about the promissory note, what is a promissory note? Remember, for example, I am promising Gopal that I am responsible to pay you rupees 2 lakh on 15th of June. That promise is actually a promissory note. When there is a promise made by one person to another to pay a certain amount of money, okay, and it should be a unconditional promise. Remember, it should be a unconditional promises. Okay, so I am promising Gopal that I am responsible to pay you. So I am called as the maker or the payer, the one who is making the promissory note and who is responsible to pay the amount. And the one person who is entitled to receive the payment is the payee. So Gopal in this case is the payee, and me, Afreen, in this case is the maker or the payer of the check. So there are two parties in a promissory note, the maker or the payer. The one who makes the promissory note is also the payer, and one who is entitled to receive the payment is called as the payee. Clear? Now, bill of exchange. Remember, what is a bill of exchange? So bill of exchange is again a written unconditional order of which direct a certain person that you have to pay a certain sum of money, okay, to the order of the certain person. That is the bill of exchange. Now I'm just giving you an example of bill of exchange. So there is one A and there is one person B. Okay, A is the seller of the good and B is the buyer of the good. Okay, now A sells good to B. Now, instead of the immediate payment, we just promise that, okay, we just demand a period of credit, or we just demand that, okay, I just want to have a 20 days time period for the repayment of this particular trade. A agrees, okay, seller agrees. But for legalizing the transaction, the seller draws a bill of exchange on its buyer, instructing a buyer that you have to make payment to me after 20 days. That is called as the bill of exchange. Now remember, in a promissory note, I am promising Gopal that I am responsible to pay you 50,000 rupees on 15. And I am making the promissory note, that is an unconditional promise to Gopal. Okay, Gopal is the payee and I am the maker or the payer. The one who is making the promissory note is also the payer. But it is bill of exchange is a order to pay. Order to pay means I have sold my car to Gopal. Gopal, instead of the immediate payment, demand a period of credit from me. I agrees. I say that okay, but I draw a bill of exchange on Gopal, instructing Gopal that you have to make payment to me. I have given order to Gopal that you have to make payment to me after 15 days. Now this is called as the bill of exchange. Now, in bill of exchange, sometimes there are two parties, sometimes there are three parties. Now, in this example, we have only two parties. Okay. Now, there is one more example. For example, A sell goods to B and B demands a period of credit. So, A just draws a bill of exchange on B that you have to make the payment of this trade to C after 20 days. Okay. Now, here there are three parties, here there are two parties. Now, the one who is making the bill of exchange is called as the seller He is also the drawer. The one who is making the bill of exchange is called as the drawer. The one to whom the instruction is given that you have to make the payment is called as the drawee. And the one who is entitled to receive the payment is called as the payee. So here, in this scenario, because I am ordering, yeah, A is ordering B that you have to make payment to me. I am making the bill of exchange. First of all, I am not responsible for the payment. You are responsible for making me the payment. So I am the drawer also. I am entitled to receive the payment. So I am the payee also. And the buyer means you are the drawee. Okay. But in this case, A is instructing B that you have to make payment to C. So A is the drawer, means the maker of the bill of exchange. B is the drawee to which the order is given that you have to make the payment. And C is called as the payee, the one who is entitled to receive the payment. Okay. So drawer is the seller and creditor, drawee is the buyer and debtor, and payee the one person who is entitled to receive the payment. Difference. What is the difference between promissory note and the bill of exchange? Remember, in the promissory note, two parties are there, the maker of the note and the one who is entitled to receive the payment, me and Gopal. In the bill of exchange, there are three parties. Okay, drawer, the maker, drawee, to whom the instruction is given that you have to make the payment, and the payee, the one who is entitled to receive the payment. Now, in the promissory note, they are two different person. The maker cannot be the payee. If I am promising Gopal that I will make payment to you, so me and Gopal cannot be the same person. But in bill of exchange, if I am instructing, I am making the bill of exchange instructing Gopal that you have to make the payment to me. So I am making the bill of exchange. I am the drawer and I am also entitled to receive the payment. So the drawer and the payee can be the one person. Okay. Here in promissory note, it is a promise to pay. In the bill of exchange, it is actually the order. Okay. Promissory note require no acceptance, no signature from the payee. Whereas the drawer in the bill of exchange need to have a acceptance from the drawee. Okay. So the liability in the promissory note, the main liability lies with the maker. The one who is making the promissory note has to make the payment. Whereas the bill of exchange, the maker's liability is secondary because the main liability lie on the drawee that you have to make the payment. But if you defaults on payment, then I have to make the payment. If A is instructing B that you have to make payment to C, now if they default, the primary liability is this. If they default, then the secondary liability lies with the C that they have to make payment to C. So this is the difference between promissory note and the bill of exchange. Okay. Now, payment in due course. Always remember what is a payment in due course. Payment in due course means when, as a banker, you are paying with the apparent tenure. Apparent tenure means whatever the instruction which is being given by the drawer. You whatever the instruction which is given on the face of the check, the date, the amount, the instruction, the complete. You are following the complete face of the check. You are not using your own mind. Means you are making the payment with the apparent tenure in good faith without any negligence, okay, to the person who is entitled to receive the payment. That is called as the payment in due course. Okay. Now the protection which is available to the paying bank means as a paying banker, what are the protection which is available to you? Now, in case you have make the payment of the forged check in a order check, okay. So if the check as a drawee, you are discharged from a liability if the check is paid to you on to the order and if that is forged. It means that in the case of order check means you have to make the payment to a particular person to whom the order is given. Okay. Now you have make the payment to that particular person. And for example, that check is a forged check, means that order check is completely a forged check. okay, then you are discharged from any type of liability. Okay, the drawee is discharged from the payment because you have followed the complete instruction, the payment in due course. You have made the payment to the person to whom the order is given, that you have the payment is received by this person only. Now if it is forged, then you have no liability. Okay, as a drawee you are discharged from any type of liability. Then in the case of bearer check means whoever is presenting that check, you have to make the payment to them. Okay, for example, a bearer check, I have a bearer check, I just lost that bearer check, and that bearer check is found by anyone else. But because that is a bearer check and that person present that check to a banker, that you have to make the payment, and the banker check that yes, this is a bearer check, and if it is the bearer check, you have made the payment to that person. Now I go to the bank and says that why you have made payment to that person, this is my check. Now you can say that this is a bearer check, who can present is entitled to receive the payment. Okay, and I have made the payment in full, in due course, without any negligence. So the banker is protected from any type of liability in this case. So here it is section 85(2), here it is section 85(1). Now, protection in the case of cross check. Now, as a drawee bank, as a banker, if you are making the payment of a cross check means the person should receive the payment in the account only. Okay, so you have to make the payment in the account only. You cannot give cash to a cross check. Okay, and if you have make the payment in full, in due course, without any negligence, with the apparent tenure of the check, of a cross check, then you are discharged from your liability. You have done your work. But for example, in this case, you have made a mistake. It is a cross check, but you have credited that amount in another person's account, because that person is coming to you and saying that okay, it is a cross check. Instead of crediting it to the account which is given in that check, please just credit it in my account. And you as a banker see that okay, it is a cross check, I can just credit it in your account. Now in this case you have lost your protection. Why? Because as a banker, your responsibility towards a cross check is you have to give in the account of the same which is mentioned in that check. You cannot credit that check into any other account. So this is actually the protection which is available for a paying banker. Okay, now next, discharge of a check in case of insufficient balance. Sometime, sometime a drawee can just without any reason reject the check. Okay, but a drawee, as a bank, a drawee bank has a sufficient balance of the drawer. Okay, present in the payment form means it is not present in any FD and all. It is present for payment, and despite of all these conditions, you just wrongfully dishonor any check as a banker, then you are liable for any type of losses towards your account holder. But 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 for example, here if the check is issued by a person, okay, and that person have insufficient balance in their account, okay, and as a bank, you have rejected the check or you have dishonored the check on the basis of that the account holder has insufficient balance. Now, in this case, that person has made a crime, and that person can be sent into a jail for a period of 2 years, or the monetary fines can be imposed on that person up to twice the amount of that check. But the condition should be satisfied. First of all, the check is being present on a valid period, means within 3 months of the date of issue, and the demand for payment should be made in notice within 30 days of the return of check. And third, the drawer is still fails to make the payment within 15 days of receiving that notice, okay, then you have made a crime and you can just go to the jail of up to 2 years, or the monetary fines can be imposed up to twice the amount of that check. Clear? That is dishonor of the check. So if wrongfully dishonored by the bank means everything is good and you just wrongfully dishonored the check, then the compensation is on you as a paying bank. But if the check is dishonored on the ground that you have insufficient balance and the check is present on a valid period, and when the check is being returned, a demand for the payment is made through a notice within 30 days. And after receiving the notice, as a drawer, you still fails to make the payment within 15 days. Then, as a drawer, you have made a crime and you can be punished with a jail of up to 2 years and twice the amount of the check. Okay, so that is the complete chapter. Now, if you have any doubt, please ask. And just give me a 1 minute as the azan is going on. Meanwhile, just drop your doubts in the comment box. Okay, any doubt, everyone? If you have any doubt, please ask, guys. No doubt, please give me a thumbs up. No doubt, everything is clear till now. Everything is clear till now. Yes or no, everyone? Cleared? Okay. So we are moving to the next chapter, that responsibility of the paying bank. Okay. So responsibility of a paying bank. First of all, very simple, very short chapter. This one page that you have to just focus. Okay. Responsibility of the paying bank is section 89, gives the protection of the paying bank of a check which has been materially altered, but the alteration was so perfect that it is not possible to detect from a trained eye. Okay, it means that, for example, a check is issued for rupees 500. Okay, and now the check is forged and 1 0 is added to this particular check, and the forgery is so perfect, the alteration is so perfect that it is impossible for a trained eye, even for a trained eye, to detect that materially altered amount. Now in this case, if a paying bank has just made the payment in full faith without any negligence in the apparent tenure of that check, okay, now that particular bank is discharged from any type of liability. There is no compensation that that paying bank has to give. Okay, because the thing which is altered was so perfect that it is impossible for a trained eye to detect that particular alteration. Okay, now section 10 defines the payment in due course. You know that what is a payment in due course. First, you have to make the payment with the apparent tenure, means the face of the check, in good faith, without any negligence, means you have checked all the details twice, thrice. Okay, then you are you have done the payment in due course. And if you have done the payment in due course, and if still the check is forged, you are discharged from any type of liability. Then section 31 says that the drawee bank means you have the sufficient balance of the drawer which is applicable or which is available for the payment of the check. Okay, then you must make the payment of that check. And if you wrongfully dishonor the check, then you have to pay the compensation to the drawer of the check. Okay, so section 31 says that if you have the sufficient balance, okay, of the drawer which is present for the payment, and the check is completely good, in a good condition, it is properly made, then you must make payment to the holder of the check. Okay, this is section 89, this is section 10, and this is section 31. Okay, now these are the responsibility of the paying bank. Important. Now these are the responsibility of the collecting bank. Again, a one page topic. Simple. What are the responsibility of the collecting bank? When a customer is giving responsibility of the bank that you have to collect the check on my behalf, then what are the responsibility of that collecting bank? Okay, so section 131 gives protection to the collecting bank. Which section? Negotiable Instrument Act section 131 gives protection to the collecting bank. And in which case, first of all, if the collecting bank has satisfied all these conditions, then you are protected from any type of liability. What are the conditions? As a collecting bank, you have opened the account with reference and with proper document. You have checked the reference, also the reference who have referred the account, you have checked that particular person also. You have followed the complete KYC. You have ensured that there should be a special or you have ensured that the crossing is special or not. Okay, before collecting the check, you have verified the instrument that it is free from any type of defect. Okay, you have checked the customer's account. Okay, so if you have followed all these conditions, then you are protected from any type of liability in case of any fraud. Okay, which section? Very important. Which section gives the protection to the collecting bank? Section 131 of the Negotiable Instrument Act. Clear? So this is the responsibility of the paying bank and the responsibility of the collecting bank. Okay. Now, everyone, I just need to have a 5 minute break. Everyone, can I have a 5 minute break and then we can start this ancillary service topic? Everyone, can I have a 5 minute break? Everyone. Okay, so let's have a 5 minute break and then we will start. Okay. Okay, now am I audible, everyone? Everyone, am I audible to everyone? Am I audible, guys? Am I audible to everyone? Yes, okay. So let's start this ancillary services. Ancillary services means the add-on services the bank is giving. Add-on services means other than the main functions of the bank, like accepting deposit. Okay, what are the different add-on services the bank is giving? Ancillary services, right? So first of all, in this, the most important thing is the nomination facility. Nomination facility in the case of bank locker. So bank are giving bank locker facility, which is a ancillary service. So in a bank locker facility, when we are talking about the nomination facility, it is under section 45ZC to 45ZF of the Banking Regulation Act. Now, if the locker is operated by the single operator, the nomination is only for one individual. If the locker is operated by two or more joint hirer, then there should be one or more person. Okay. Photographs of the nominee can be obtained by the customer, right? Acknowledgement of the nomination cancellation or any variation should be done in the nomination form, right? Now, when we are talking about the local item, the closure and discharge of a locker item. So, if the locker is inoperative for a period of 7 years, even if you are paying the rent regularly, the bank has this liberty that they can just transfer the content of the locker to the nominee and legal heir and then dispose of the article in a transparent manner. They just take the decision to close the locker if you are being operative for a period of 7 years. Next, discharge of a locker content if you haven't paid a rent. So if you not paid the locker rent for 3 years in a row, now bank are allowed to close the locker. Now in this case, first you have to give the notice in one English paper and one any regional newspaper about the locker rent and giving reasonable time to the person that you have to submit the money, right? And if you are not traceable, okay, and if you are even not traceable in this case, okay, then the bank has this right that they can just discharge of the material of that locker rent in a if at that locker in a transparent manner, okay, in the presence of the person or to the nominee or to their legal heir. Okay, so non-payment of the locker rent for a complete period of 3 years, and if the locker is inoperative for 7 years, in both the cases, the bank can take this decision to close the locker. Okay. Now, custodial services. Now, what is a custodial services? Again, this is a add-on services. So, custodian bank means when the bank as a financial institution just hold the customer security for the safe keeping of that particular thing. So when the customer is submitting shares, stocks, or any other assets in a electronic or physical form to the bank for the safety and security of that particular shares, securities, and asset, then in this case, the service is called as custodial services, which the bank is giving to the customer, and in this case, the bank is called as the custodian bank. Clear? Now, portfolio management services. This is again an ancillary services the bank is giving to you. Portfolio means the basket of the investment. Means sometimes the bank suggest the customer that in which securities you have to invest to maximize your profit. So when the basket of currencies in which there are different debt instrument as well as equity instrument which has been suggested by the bank to maximize the profit of the customer, that is called as the portfolio. and the services is given as a portfolio management services. And remember, there are certain guidelines when a bank is giving that portfolio management services. First of all, the bank should not guarantee any return. The bank is just providing you the recommendations that you can just invest in these securities, right? Without giving you a assured predetermined written promise, right? So you as a bank cannot give a predetermined written, okay? And that particular money which you are accepting for the portfolio management services, that should be for a long period of time. It should be not for a minimum period. The minimum period for which you are accepting money for the portfolio management services is 1 year and above. So this is the RBI guideline. Okay, so these are some of the ancillary services. Okay, the most important part of this chapter. Now, Unit 16, this is financial inclusion and financial literacy. Now, again, we are just discussing the most important part. First of all, in this, we have ultra small branches. Now, what are ultra small branches? Ultra small branches are those branches which are operated from the rural areas where the BCs can operate. So it is simple like the brick and mortar structure, which are actually working as a office place for the business correspondent. Who are business correspondent? They are like the extended arms of the bank. So when the bank is not having any physical branches to any those areas which are very far away or which are unreachable to the bank can give financial services to the customer there with the help of BCs, which are called as business correspondent, which help to raise the financial inclusion of the bank. Now, there is a simple brick and mortar structure which has been given to the BCs, which are working like a office place to them, which are called as the ultra small branches. And these ultra small branches are set up between a base branch and the business correspondent location. Okay. Now, payment banks. What are the payment banks? Payment banks are those banks which are providing the remittance facilities, especially to the unorganized worker or the migrant labor force. Okay, so these are the banks which are again, for the financial inclusion. They can just offer the small saving accounts also, but they are specialized in giving payment and remittance facilities to the migrant labor workforce, low income household, small business, or any unorganized sector. Now, what are the activities for the payment bank? First, they can accept a demand deposit of up to rupees 2 lakh per customer. The maximum deposit in a demand deposit account is 2 lakh per customer for a payment bank. They can issue the ATM prepaid payment instrument. They can just have the internet banking services, payment and remittance services, utility bill payments. They can just help in the distribution of mutual funds and insurance also. But there is one condition, that payment bank should have their at least 25% of the branch in the rural areas. Okay, so that are the payment bank. Now let's talk about the financial literacy. Financial inclusion means connecting various people to the banking system of the economy. Whereas when we are talking about the financial literacy, it is actually a process for improving the knowledge and understanding of the people for using their financial product and services. Okay, so that is financial literacy, giving knowledge about the financial product to the customer. Now, they are twin pillar. Financial inclusion and financial literacy, they are considered as twin pillar. Now, this is very important part. When we are talking about literacy, when you are giving knowledge to any customer, means you are shaking or stimulating their demand side. When you are giving knowledge, when you are giving financial literacy to the customer, it means that you are just awakening their demand side, because now they are aware that okay, these are the different type of products which are available with the bank. Now they can just raise the demand of that product. That is called as the financial literacy. Whereas financial inclusion, when your demand side is awakened, now you have demanded that, okay, we have these different products. When you have demanded, now for meeting the demand, you have to present the supply, and for these supply, the financial inclusion services are given to the customer. So financial literacy, it stimulates the demand side. Financial inclusion, it actually stimulates the supply side. Okay. Now, there are different initiatives which has been taken by Reserve Bank of India. The first initiative is Rural Self-Employment Training Institute, which has developed under the initiative of Ministry of Rural Development, which is actually established in the rural areas for the skill upgradation of the rural youth, so that they can just have the self employment, okay, by themselves. So in this particular purpose of the Rural Self-Employment Training Institute is to provide the training to the rural youth for upgrading their skill, and that training is as per the demand of the economy, right? So whatever the demand is, the training is given according to that demand. Hand holding support is also given. This Rural Self-Employment Training Institute, after giving training to the rural youth, give hand holding support to help them establishing their own business. So this is one of the initiative that has been taken by Reserve Bank of India. Clear? So this is financial inclusion and financial literacy. Now, if you have any doubt till here, please ask your doubt. Everyone. If you have any doubt, please ask. No doubt, please give me a thumbs up. Everyone. Everyone, guys. Everyone. Bhupaji, congratulations. So just you have cleared two marathons, seen two marathon, and you have cleared your IEIFS paper. That is a very good comment for me. Thank you so much. Thank you so much. Thank you so much, Bhupaji. Any doubt? Guys, if you have any doubt till now, please feel free to ask your doubt. Then we have to start this. That is the customer service guideline. Next chapter. Any doubt? Now, next chapter is this customer service guideline. So, I'm just discussing the most important thing of this unit, right? So, customer service guideline, first of all, the ATM operation. So, yes, free transactions are given at the ATM. So, customer are eligible for 5 free transactions, financial and non-financial, every month from their own bank ATM. Okay, and they are also eligible for free transactions from others bank ATM, 3 in the metro center and 5 in the non-metro center. PIN validation for every successful transaction is compulsory in the ATM, and every ATM should have these proper facilities to lodge the complaint against any ATM. For example, any ATM should display the telephone number of that ATM owing bank to file the complaint if there is any stuck transaction. Okay, so for any grievances of the customer, the ATM should have a proper display of the phone numbers and the site where you can just complain about that particular transaction. Okay, now ATM operations. In the ATM operation, there are penalties. Penalties means if there is cash out in any ATM for more than 10 hours in a month. Remember this, if there is cash out in any ATM in total for more than 10 hours in a month, they attract a flat penalty of rupees 10,000 per ATM. Okay. Now, this is a very important portion. Please understand this concept clearly. So, what is the customer's liability in case of unauthorized banking transaction? So, there are first of all limited liability for the customer in case of unauthorized banking transaction. But in some cases, there are zero liability of the customer. Now, in which case there is a zero liability of the customer in case of any unauthorized electronic banking transaction? First of all, if there is any deficiency on the part of bank. Okay, even if the customer doesn't report about that transaction, but there is any deficiency on the part of the bank, then the customer is entitled to have a zero liability towards that unauthorized transaction. The customer don't have to pay a single penny to the bank. Second, if there is any third party breach, there is a security lapse in any third party uh, service provider, right? And there is no deficiency on the behalf of the customer, means the customer haven't shared any details, or there is, for example, third payment gateways, what the compromised. Okay, now in this case, the customer is having a zero liability. Okay, now if there is any loss, okay, and that is occurred and the customer is reporting that unauthorized transaction for a period of, there is a delay in reporting for if the customer, if there is any unauthorized transaction, okay, and the customer has reported that transaction within 3 days, everyone, the customer have no liability towards this unauthorized transaction. You have reported immediately. Immediately means within 3 days. Then you have no liability. But if you have delayed in reporting the transaction, and what this delay means you have reported the transaction between 4 to 7 working days, means you have delayed from your side. Now you have a limited liability. Limited liability means either the amount of the transaction or this threshold limit, whichever is lower. Like for example, if you are a BSBDA account holder, okay, so for example, you have unauthorized transaction of rupees 10,000 and you have delayed in reporting. For example, you have reported within 3 days, you have zero liability. But if you have reported between 4 to 7 working days, now either you have this liability, this threshold limit, or the amount of transaction, whichever is lower, means you are entitled to give only this 5,000 rupees. Means up to 5,000 is your maximum liability in this case. If you have the saving bank account, or if you have a credit card which up to 5 lakh limit, then you have a maximum liability of 10,000. And if you have a limit of over and above 5 lakh, then you have a maximum liability of 25,000. Okay, but now if you have reported after 7 days, then bank are free to decide your liability. Bank can just charge you the full amount also. So within 3 days, no uh thing or no liability. 4 to 7 days, it is either the amount of transactions or these amount, whichever is lower. Okay, and third is, if you are reporting after 7 days, after 7 days, bank are free to decide. They can even charge you the full amount. Okay, so this is very important to understand. Okay, now let's talk about the duties and rights of the banker. Now we have already discussed three rights of the banker. What are these three rights? The banker's lien, the right to set off, and right of appropriation. I have already given you the details of these rights. Okay, what are banker's lien, what are right to set off, and what are right to appropriation. So I am not repeating it because I have just given you the detail of these, right? Now let's talk about the different thing. First of all, duty of secrecy and confidentiality. Remember, the bank has this duty of secrecy and confidentiality, means bank has to maintain the secrecy and confidentiality of the customers. But this duty of secrecy and confidentiality is actually qualified. It is not absolute. It means that in certain condition, if a bank has actually discloses the customer's detail, then it is legally permissible. And that's why it is said that it is qualified, means it is qualified according to the situations. It is not absolute, it is not same for each and every situation. So bank has this right that you have to maintain the secrecy and confidentiality, but in some cases if you have discloses the affair of the customer, then it is legally permissible. Now what are these cases? First of all, if the disclosure is under compulsion of law, Compulsion of law means you have received any order from income tax authority or court or anyone. When there is a duty to public it, or when there is a duty to public to disclose, means when it is in the subject matter of the public, when the public needs to know about this particular transaction, then if you have discloses the matter, then it is legally permissible. When it is actually in the interest of bank, or when the customer given their consent that you can just disclose the detail to the public. So in all these cases, um, if you have discloses the affair of the customer, then it is legally permissible. Okay. Next thing, in this, BCSPI is very important, Banking Code and Standard Board of India, which is set up by SS Tarapur Committee. Okay. Then BCSPI, what actually a separate society which is registered under Societies Registration Act 1860. Okay. And it is like a watchdog to ensure the consumer, or to ensure the rights of the customer in the banking services, right? But BCSPI, Banking Code and Standard Board of India, this has been replaced by Charter of Customer Rights. So which is valid now? So Charter of Customer Rights, COCR, is valid now. But before COCR, BCSPI code was there to watch the customer's right in the banking services. Okay. So now we are starting this unit 19. But before starting this unit 19, if you have any doubt here, you can ask everyone. Any doubt? Till here, if you have any doubt, please ask. If no doubt, please just give me a thumbs up. Everyone, till now, if you have any doubt, please ask. If you don't have any doubt, please give me a thumbs up. Each and everyone. Clear? Now, let's talk about this Unit 19, Grievances, Readdressal and RBI Integrated Ombudsman Scheme. Now, in this RBI Integrated Ombudsman Scheme is very important. RBI Integrated Ombudsman Scheme is very important, remember. Okay. So, what I am going to have this RBI Integrated Ombudsman Scheme. So, before this scheme, there was three different scheme running. The normal Banking Ombudsman Scheme 1995. Then there was Banking Ombudsman Scheme for NBFCs 2018. Then there was Ombudsman Scheme for Digital Transaction 2019. Then these three schemes has been merged in 2021 and the name has been converted to Ombudsman Scheme, the RBI Integrated Ombudsman Scheme. Now the operational aspects, first of all, RBI can appoint its own officer as well as any other for carrying out the function of the ombudsman, and the ombudsman is appointed for a maximum of 3 years at a time. There is Central Receipt and Processing Center, CRPC, Chandigarh, which receive all the complaint. Whenever any customer is complaining, that complaint is received by CRPC, Chandigarh. Okay. Now RBI has decided the territory, the authority of each and every ombudsman. So each and every ombudsman is only allowed to handle the complaint which is forwarded by CRPC. So if any ombudsman is receiving the complaint directly, first they have to forward this complaint to CRPC, then the CRPC allot them, and then they will just handle the grievance of that customer. Okay. Mode of satisfaction, either the ombudsman just settle outs between the parties by agreement or by conciliation or by through any mediation process. Okay. Now what are the proper process of filing the complaint with the CRPC? You can either just file the complaint in the online portal, this is the website, by electronic mode like email, or by post or courier, or by hand delivery. So these are the procedure of filing the complaint. Confidentiality, yes, the ombudsman is required to maintain the confidentiality of the information they have received from the customer. But in some cases, if they are sharing, it is allowed. Like, for example, when it is required by the law, when the person give the consent by themselves, and when the parties are required to disclose them for natural justice. Natural justice means when both the parties want that, okay, this should be published, this should be made public so that the public can decide who is actually correct here, right? So in this case, if you are disclosing, then it is all allowed. Okay. Next, processing of the complaint. Now when we are talking about the complaints, some complaints are not valid, some complaints are not valid. It means that they are not in the form of complaint, they are just giving you suggestions or guidance. Then these are not considered as a valid complaint, and then it is rejected by CRPC. Some complaints are not maintainable. Maintainable means they are not on the permitted ground. Then these complaints are also rejected by CRPC. But when the complaints are valid and they are maintainable, then these are forwarded to the ombudsman for their further examination. Okay. Now, remember, the concerned regulated entity on receipt of the complaint from the CRPC, they have to give a written response within 15 days with the supporting document. So CRPC, if giving you that, okay, uh, against you, I have received a complaint. So you have to submit your side within 15 days in front of the ombudsman. Okay. Now, what is the award that the ombudsman can give you? First of all, they can give you the actual amount which is involved in that case without any ceiling. But if there is any direct loss or consequential loss, the ceiling is 20 lakh. They can just give you the compensation of max to max 20 lakh. In case of any other, like there is any loss of time or expense or harassment or mental anguish, then for this, the maximum compensation the ombudsman can give you is up to 1 lakh. Okay. Now, award of copy. So the copy of the award is given to both the complainant and the regular entity. And you have to, as a complainant, you have to accept the award within 30 days of receiving the copy. But if you haven't accept the award within 30 days, the award will be lapsed. Okay. Now, if you are not satisfied with the decision of the ombudsman, you can just go against the decision of the ombudsman to the appellate authority. And appellate authority may allow you an additional time period of 30 days for settling of the complete grievances. Okay, so this is the rewards. Now there are some complaints which are rejected by ombudsman. What are the complaints which are rejected by ombudsman? First of all, in his opinion, in the ombudsman opinion, there is no deficiency of the service, or it is beyond the power of the ombudsman, or it is without any sufficient cause, it is without any reasonable diligence. Okay, for all these, if the complaint are of these nature, then these are rejected by the ombudsman. Clear? So this is the complete chapter. Any doubt, everyone? Any doubt? If you have any doubt, please ask. Okay, clear? Now, this Consumer Protection Act 2019, what are the rights of the customer? How the customer is satisfied, what are the different rights of the customer? This chapter is very easy, and this chapter is only for your reading. Okay, so there are different type of rights of the customer: right to be protected, right to be assured. Then under this we have different fora. Okay, the CCPA, very simple thing. I have written each and everything in detail here, you just have to read it out. If you have any doubt in this chapter 20, you can just ask me in tomorrow's session, because this is a very easy chapter. There is nothing to explain in this chapter. I have given you a very clear cut note about the Consumer Protection Act 2019. It is just for reading purpose, you just read it out. If you have any doubt in this chapter, you are free to ask your doubt in tomorrow's session. Okay, Okay, everyone, you can just read it out this chapter, okay, once you receive the PDF. Okay, now the last chapter is Unit 21. Unit 21 is the Right to Information Act. Okay, so in this, there are certain obligations of the public authority. In the Right to Information Act, we have certain obligations. First of all, there is a obligation for the regulated entity that you have to maintain the record of all the transactions. Okay, so that if the customer is asking you about any information, the customer should receive the information if you have maintained the record. Okay, now if you are a public authority, okay, and you have make any policies, you should display all the relevant fact about behind formulating that policy. Okay, so right to information means as a customer, you can just have a right to information. You can have a right to ask about any of the project which are going on in the public authority. So the public authorities have some these obligations, like they have to maintain the record, they have to disclose all the relevant fact about the policies, they should have give you the reasons for taking the decisions, and sometimes they should reveal the information on a suo motu basis. Suo motu basis means on self basis without actually being asked. Okay, then you should wide as a public authority, you should be wide disseminated the information. It means that you are just widely spreading that information. Means, for example, if any customer is asking you about any of the information, you are not just sticking that information in the notice board of your office. You have to display it to the public so that it is easy accessible and it should reach to a wider audience. Okay, now there are some information which are exempted from the disclosure. So if you are asking the information about these from a public authority, then these are information which are exempted from a disclosure. Like, for example, if it would endanger the life of everyone, there is any cabinet paper, there is any information from the foreign government. So if there are any information related these matter, these are rejected from the disclosure. Okay, now appeal means, see, if you have filed a right to information RTI. Okay, the appeal should be made within 30 days to the senior officer above the central public information officer. First, you have to file it to a central public information officer. If you are not satisfied with the response of this, you can file an appeal against the central public information officer to the senior officer. Okay, within 30 days. Okay, now 30 days, third party information appeal shall be made within 30 days of the order. Now if you are not even satisfied here, then you can file a second appeal against the senior officer to the central or state information commission within 90 days. Okay, and whatever the decision the Central Information Commission is taking, this is binding for all parties. So first you have to contact this. If you are not satisfied the response, then you can just go to the senior officer over and above this within 30 days. Not satisfied, go over and above second appeal to either the Central or the State Information Commission within 90 days. Okay, and even when you are not satisfied here, you have to abide by the rules, because you cannot make an appeal against the Central Information Commission because the decision is binding on everyone. Okay, now Central Information Commission, these have the Chief Information Commission and Central Information Commissioners, which are not exceeding 10. Now who are under this, so they are appointed by the president on the recommendation of a committee which consists of a prime minister, the leader of opposition in Lok Sabha, and a union cabinet minister. They can just hold the office for a period of 3 years up to the age of 65 years, whichever is earlier, and they are not eligible for the reappointment. And the headquarter of the Central Information Commission is in Delhi. Okay. Now, in the same way, we have State Information Commission, which has State Chief Information Commissioner and State Information Commissioners not exceeding 10. Now, they are appointed by the recommendations of either the Chief Minister, Leader of the Opposition in the Legislative Assembly, and a Cabinet Minister. Again, they can just hold the office for a period of 3 years up to the age of 65 years, whichever is earlier, and they are not eligible for the reappointment. Lastly, the Central Information Commissioner can impose a penalty of rupees 250 each day, okay, if you delay in providing the information to the customer, okay, and it can be subject to a maximum of 25,000. Okay, so this is the penalty that can be imposed on you as a public authority if you delay in providing the information to the consumer. Okay, so this is it. This is the complete module. Now, if you have any doubt in the whole module, please feel free to ask your doubt, everyone. If you have any doubt in the whole module, you are free to ask your doubt, everyone. Clear? Everything is clear. So this is it. This is the complete module A. We have finished module A. Now we are going to start module B from tomorrow's class. And very important thing is you have your marathon for module A tomorrow, and it will be at 8 a.m. You know that you have marathon of module 8 tomorrow at 8 a.m. So you have to join that marathon for your practice session. Everyone, don't miss out. Okay? Don't miss out this marathon because it is very important for you all. So it will be on the same YouTube channel. Okay? So you have to attend that marathon session. I will be sharing the link in the Telegram. Okay, so thank you so much, guys. Before going, just please give your ratings and feedbacks to the session. Everyone, please provide a rating and feedback to the session. Everyone. Okay, thank you so much. Have a very good night. Take care. Meet you in the tomorrow's morning marathon session. Thank you. Thank you, everyone. Bye bye, guys. Take care. Bye, guys. Take care.